I'm Andrew Samalin, principal of Samalin Wealth, and welcome. In our last video update of mid-August, we asked if we were in a recession and what are the effects to stock market performance. And by way of recollection, we had mentioned that over the last 7 recessions, the markets had returned 3.5%. Now that's far from stellar performance for sure, but given yesterday's market rout of 1,300 points on the Dow and a 4.5% loss on the NASDAQ, does that spell the beginning of the end? And it doesn't, but here's what happened. There were higher than expected inflation numbers. The markets clearly said that at the upcoming FOMC meeting, the Fed is going to raise interest rates by 75 basis points in order to nip inflation in the bud. This is what the Fed should do, and it is long overdue. Now, I think history is going to show that the Fed's aggressive response to COVID to protect the economy was the right one. But that era appears to have passed, and we are unwinding that. And this unwind, while painful, will come to an end. So do we need an aggressive response to fight inflation? The answer is we do. Will it cause short-term volatility? It will. But what if we don't increase interest rate? Is inflation that bad? It is, because costs go up, you can't get labor and materials, profits go down, PE multiples compress, and markets go down. So if you choke off inflation early, the prices of goods stabilize, labor dynamics stabilize, and the markets settle down. Now, people love to invoke Paul Volcker, who was the ex-Fed chair during 1979 through 1987, and he was credited for breaking the back of inflation. How did he do it? Well, there was massive inflation. He increased interest rates up to 17%. Inflation was then broken. Interest rates went back down to 4%. Now, people are expecting them to do the exact same thing now, but let's add a little perspective. Interest rates aren't 17%. The 10-year Treasury yesterday was 3.41%, and the Fed Fund futures are expecting them to go up to 4.25%, maybe 4.5%. A far cry from the 80s. And by the way, that did sow the seeds back then to one of the longest bull markets in history. So what they're asking today is, are we expected to go into a soft landing? Well, the last soft landing there was when Scully put down that 747 on the Hudson and did so beautifully and saved everyone on board. The odds of a soft landing here could be small, but assuming there is a more rigorous response, that rigorous response will sow the seeds to the next bull market. So at the end of the day, take a look how this affects your investments and your wealth. And if you have any questions, please feel free to reach out to us at samalinwealth.com. And of course, you can call us at 914-666-6600. I'm Andrew Samalin again, principal of Samalin Wealth, and thank you for joining us.